This is the concluding lecture in this section. So we've covered quite a bit of ground in this section. At the end of the day, you have to know your style and you have to look at your objectives and you have to look at your limitations and pick a style that is suitable to you. So one of the biggest factors is time commitment. So how much time do you have to look at the markets? Let's say your other job hours completely overlap the market hours, then it's going to be very difficult for you to look at the markets on a daily basis. And therefore, you would want to choose an investment horizon that is slightly longer, 6 months perhaps, 1 year perhaps. So you would be more on the investor end of things rather than the trader. You could be a swing trader, I suppose, where you keep positions for 3 to 4 weeks, and when the move happens, you can get out and look for other opportunities, and that's fine. But basically, time commitment is one of the biggest factors that determines which style is suitable for you. Then you also look at your return objectives and what are your risk tolerances and what are your time horizons. So basically, if let's say you have an account of $50,000 and if it drops to $45,000, would that be something that you'll be able to handle, or you don't want to take that much risk? Then obviously your return objectives also become slightly lower and you have to structure your investments or trades accordingly. Do you want to do active management, in which case you might fall into the trader category? Or do you want to do the investment, which is much more longer term? But regardless of which style you choose, you must be able to sleep well at night. If your positions are bothering you and you're not able to sleep well at night, that means you are in the wrong slot, because you can occupy various slots in this whole picture. So you can be a short-term trader, you can be a long-term, mid-term, you can be a technical trader, you can be a fundamental trader, you can be a value investor. There's all kinds of things that are possible, and you might need to try a few different things to understand which style actually suits you, because that's important too. You have to like it, you have to be good at it, and it should work for you. So maybe a lot of paper trading, virtual money trading is what you should do when you first get into the markets, and try different things. Once you try different things, it'll be clear that one set of parameters will work for you better than the others, and really that's the one you should follow. Now, many people also choose an advisor, a financial advisor. So even to your financial advisor, you can build your portfolio through the advisor based on your objectives. If you don't want huge volatility in your account, you would tell your financial advisor, so whatever your objectives are, whatever your style is, and if you use a financial advisor, please make sure that you convey those objectives to him so that he can invest it in the style that's suitable to you. That's the end of this section. Now we're going to jump into equities and lots of trading examples, and we'll go into all the details, equity and equity related products. So we're talking about stocks, mutual funds, ETFs. This is going to be a great introduction to investing and trading in the real markets.